Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Tuesday, May 30th, 2023. Before I click through all the charts, just want to encourage you to please click like and subscribe if you haven't already. And last but not least, check out wickedstocks.com, where you'll find we offer a full suite of analytical videos just like this, both daily and weekly. Daily in the Triple Q, daily in the SPY, weekly analysis in the S&P 500, NASDAQ 100, the long bond ETF, that is the TLT, and two individual stock picks every week that you never see on YouTube. In those stock picks, we cater to what I would consider the longer term swing trader, the 3 to 5 week moves, as well as the near term investor, 2 to 3 moves and 2 to 3 month moves and beyond. We're always looking for 20% moves on the underlying stock itself. So let's move on to, I want to start with the Triple Q. I don't show the SPY in Tuesday's letter. There's only so much room on the newsletter itself. But the Triple Q did, yes, settle in a long-term buy signal at the end of last week by closing above the 339.20 formation. But I must emphasize that the S&P 500 did not. The SPY did not. It settled right at its channel top. And so I think because of the longer term consequences potentially of this buy signal, it deserves another week to flesh out. In other words, I would say the Triple Q is susceptible to falling back and rejecting this buy signal, especially if the SPY now falls away from its channel top, which it may, or the SPY may continue higher and trail by 1 week the buy signal that we see here on the Triple Q. So this is going to be an important week. And while we're at it, let's take a look at the weekly chart for Tesla. Tesla did, yes, close above this descending channel top on the weekly chart, but not by a 1% margin, inside the 1% zone. It was 192.40, as I recall last week. We settled 193.17. And if you look at the daily chart, it comes in at 193.37. So we certainly did not close above that structure on the daily chart. It's more properly drawn here, 193.37. So we settled just below it. And so I will say that that Tesla is also obviously susceptible to falling off. I mean, it is at a capitulation point, so to speak, and it can go higher from here to 208.93 this week if we close above 193.37, but 193.37 is still a significant ceiling that is yet to be clearly violated. It has on the weekly chart, but not by a 1% margin. I like the 1% threshold for longer term moves, and 193.37 is really our level today, really our level for the entire week. If we cannot close above it, the market over the next week or two susceptible to falling back to 168.55, and over the next month or two back into the mid 140s. And so, if you're still, or if you bought, let's say, those 170 or 165 out of the money puts that I mentioned as a 1 to 2 week possibility, you can continue holding on to those. And if you bought the 145 out of the money puts, the base of this channel longer term that don't expire for at least a couple of months, you could still hold on to those. Continued daily settlements at or below this 193.37 formation will allow all that to still play out. So let's take a look at the day itself. So I've got a rising. I haven't, these are pretty simple to construct. Many software programs don't come with them built in. I do these manually. I've been doing them for years. The rising 1/3 speed line, the rising 2/3 speed line. So it is projected off of this late April low against last Friday's pullback high or move high following that low. And 184.68 is the rising 1/3 speed line. In other words, the move off of that low, the momentum of that move remains intact above 184.68, which means it's a good area to buy for the day. I also like 184.68 because it lines up roughly with Friday's low of 184.53. In other words, were we to close today below 184.68, I think that is an aggressive southbound pivot point into later week. Closing below 184.68 168.55, I think with this kind of volatility becomes a 3 to 5 day target that may spill into next week. But in any event, 168.55 is a rising two-thirds speed line. It is our weekly support. You can see lower right here in the support resistance column that can contain weekly selling pressures when tested. And from here, we can turn back up into the 190s again within a week or two of doing so. In terms of the 2 to 3 week dynamic, I break it down bearish below 193.37 still, anticipating 168.55. Closing below 168.55, the 2 to 3 week dynamic shifts negative again into the mid 140s. It's pretty stair step. There's one step at 168.55 that can contain weekly selling pressures and have settled below the mid 140s anticipated within several weeks of doing so. And that is to say also that holding below 193.37 will keep, by the end of July, I will say, 146.16 in reach. Now, there's no sign for that, and obviously there's no denying this up move, and the trend is still, obviously, as I just mentioned a moment ago, from the April low, a bullish above 184.68. But I'm putting more emphasis on this channel top as a trend defining element able to contain longer term buying pressure. So I think I've covered the downside pretty well. If you're a day trader, you can buy 184.68, sell 193.37. If you are a 3 to 5 day swing trader and we close below 184.68, you're playing the short side down to 168.55, if you catch my drift. If you are a 1 to 2 week swing trader, you're short in the 193.37 area and buying back at 168.55 and even going long then 168.55 for the following possible 1 to 2 week rebound into the 190s. And that pretty much covers the downside. Let's take a look at the upside. Well, I'll show you this chart. If things get ugly today, and I don't anticipate it, but if we happen to sort of break or open below 184.68, yes, we have 179.47. That's a decent day trade level. But once again, if we close below 184.68, I have no interest in staying long into later week. In fact, being short into later week, anticipating 168.55 is the play. Now for the upside, and we may actually push or open today above 193.37. And if we do, 202.21 is likely. Just a very newly formed short-term, this is like a 1.5, 2 week channel top, can contain buying on an intraday, possibly through the day basis. But if we close today above 193.37, I would anticipate 208.93 within 3 to 5 days. So this is your 3 to 5 day swing trade to the upside. If we close above 193.37, 208.93 in reach by the end of the week. Now, for those of you who bought those 165 or 170 out of the money puts or the 145 out of the money puts, holding below 193.37 maintains that. The big question is if we close above 193.37, should you liquidate? And there's two arguments there. One is yes, because we're going to test 208.93 sooner than later. But, 208.93 is a significant long-term resistance area in itself. And I'm not suggesting that you hold those out of the money puts for the next week, 2 or 3 as we continue trading or testing, for instance, 208.93. 208.93, and I'm just going to get back to this chart here, is a 3 to 5 day target if we close above 193.37. It's a good 3 to 5 day upside swing trade. You can take profits at 208.93, and 208.93 is our primary long-term price ceiling. It can contain buying into later year. From here, we can fall off in a meaningful way as we move into July, August, September. It would be a settlement above 208.93, however, at the end of this week, and that will need to be by a 1% margin. I'll apprise you of that exact number later in the week. If we settle Friday above 208.93 by a 1% margin, we've got a good low in for the year, no more considering the revisiting of that January low anytime soon. And with that, I would expect what I have is like the 290s over the next few months. And I don't have it drawn anywhere, but if you can imagine a trend line off these lows coming up like this, and then a parallel channel top rising. So it's a newly formed rising channel top that if we close above 208.93 becomes our next 2 to 3 month objective. Right now, that rising channel top is around 265, but it's around 295 as we push into early August. And so if we close this week above 208.93 by a 1% margin, longer term bullish continuation, no reason to be long any puts on a longer term or even near term basis. And yes, if you're still holding those 175, 165, 145 out of the money puts, and we close the week above 208.93, cover those and reach for, I'd say, 290 out of the money calls that don't expire for at least 6 months. I think it'll take 2 or 3 months to realize, but you don't want to buy a strike that expires in 2 months when it'll take 2 months to reach it, if you catch my drift. Anyway, I'm past the 10-minute mark. I don't like to do that. I'm going to leave it at that for Tuesday's Tesla Report. Please click like, subscribe, and check out wickedstocks.com.